Here is the overview of today's gold market news, precious metal market performance, price trends, and technical outlook. Impact of U.S. economic data and stock market reactions on gold prices. Gold market response to U.S. and China fiscal policy. Here is the latest update on the precious metal market performance, price trends, and technical outlook. Gold prices are modestly higher, with February gold at a 4-week high, up for $30 at $2,694.50, and U.S. gold futures increased by 0.6% to $2,707 on Friday. The bullion has gained over 1% this week, driven by safe haven demand amid uncertainties surrounding U.S. President-elect Donald Trump's policies and developments in the U.S. equity markets. A successful test of resistance at $2,675 or $2,685 could pave the way for gold to test the next resistance levels at $2,715 to $1,725. The bulls have a near-term technical advantage. The next key price target is a close above the December high of $2,761.30. Support levels are anticipated at $2,686.90 and $2,673.70. Silver prices are slightly down, with March silver at $30.88, down $0.135 from its 4-week high. Silver is attempting to settle above the $30.50 mark, benefiting from increased demand for precious metals. Spot silver rose 0.7% to $30.33 per ounce, heading for a weekly gain. However, silver bears hold a slight technical advantage. A price above $32 would signal strength for the bulls, while a close below $29.1 for $5 would favor the bears. Resistance levels are at $31.50 and $32, with support at $30.50 and $30. The gold-to-silver ratio has pulled back below the 88.50 level, which is supportive of silver's price action. The relative strength index is in moderate territory, suggesting that silver has room for further momentum if the right catalysts emerge. Platinum is testing multi-week highs near the $985 level, amid a broad rally in the precious metals market. Platinum prices are firmed at $961.40, an increase of 0.3%. If platinum manages to settle above the $985 level, it could head toward the next resistance zone at $1,020 to $1,030. The strength of platinum in the rally suggests that the broader precious metals market is gaining momentum, with platinum showing notable potential to break through resistance levels if the rally continues. Meanwhile, palladium prices have increased 2.3% to reach $948.04. Moving on, here is the impact of U.S. economic data and stock market reactions on gold prices. December's employment report showed a much stronger than expected job growth of 256,000, well above the 160,000 forecast. Unemployment percentage fell to 4.1%, beating expectations of 4.2%. The report signals a strong U.S. labor market recovery, which could affect Federal Reserve interest rate decisions, making it less likely that rates will continue to decrease. Meanwhile, the U.S. dollar index is higher following the strong jobs report. However, U.S. stock indexes are pointed toward lower openings following the jobs report, with a sell-off occurring after the data release. Asian and European stock indexes were mixed to lower overnight. The rise in bond yields is likely to impact the equity market, particularly for overvalued tech stocks, and could increase the attractiveness of fixed-income instruments. U.S. 10-year Treasury yields spiked to near 5.0% post-report, but settled at around 4.8%. This rise could cause a shift out of U.S. equities into fixed-income investments. The precious metals market is seeing a rally, driven by increasing demand for safe haven assets, particularly in the context of a sell-off in U.S. equity markets, leading investors to seek safe haven assets. Rising demand for these metals is supporting prices across the board, including gold, silver, and platinum. The shift in focus towards precious metals like gold and silver reflects concerns over market volatility, with equity markets under pressure. This is likely tied to broader economic uncertainties, prompting investors to turn to assets perceived as safer, such as precious metals. Next, let's look at the recent gold market response to US and China fiscal policy. Analysts, including Karsten Meg from Julius Parr, highlight the long-term potential for fiscal deficits and unsustainable debt to weaken the US dollar, potentially undermining its role as the world's reserve currency, which could be bullish for gold. Donald Trump's vow to implement tariffs could spark trade wars and inflation, further increasing gold's appeal as a hedge against inflation. The transition to Trump's presidency and his economic policies, including tariffs, are key factors contributing to market volatility and influencing investor decisions, particularly in the precious metals sector. The focus on potential inflationary pressures and Trump's policies, also known as Trumpflation, is helping to drive interest in gold. The bullion is seen as a hedge against inflation. However, higher interest rates make gold less attractive since it yields no interest. Meanwhile, China's central bank suspended purchases of Chinese government bonds due to excess public demand and to support the struggling yuan amid a weak Chinese economy, driving investors towards gold to hedge against uncertainty.